It's time to pack your bag because we're going to be looking at Airbnb stock in the after hours after reporting to their Q1 numbers, which came in after the bell. Revenue coming in at $1.5 billion. That was 70% year-over-year growth. We'll come over here. We'll look at the numbers, the profitability, if there is any with Airbnb, and then we'll come over here and look at this from a technical perspective. Now, during the regular session, Airbnb was down 5%. In the after hours, I'm seeing up about 3.75%, almost 4%. But just keep in mind, year to date, the stock is down 16%. Over the last year, down about the same, down about 13%. We have to remember that this company has a 97, yeah, that's right, not 97 million, a $97 billion valuation on this one. So I tell you what, there better be a lot of growth in the cards for Airbnb. We'll talk about what the estimates are here in a second. But let's focus on this most recent quarter. Q1 came in. We talked about how it had $1.5 billion worth of revenue, 70% year-over-year growth. That beat expectations by about 60 million. You'll notice that Airbnb also gives us a gross booking value. Some of you might be confused. A $97 billion company with $1.5 billion worth of revenue. Yeah, that's right. Well, the gross bookings are $17.2 billion. That is the total amount of money that Airbnb collected. But remember, this company distributes the vast majority of that. In fact, over $17 billion of that back to the property owners that list their properties on Airbnb. Airbnb is simply a marketplace and takes a percentage. So if this $17.2 billion of business booked through the platform, Airbnb gets to recognize $1.5 billion. So start doing the math on that valuation when we're looking at a $97 billion company that does $1.5 billion in the most recent quarter in terms of its revenue. We'll go through and look at that more. Now, in the upcoming Q2, actually pretty nice quarter. Okay, obviously we're heading into kind of summertime. Families and people with kids and even people without kids, they're off and traveling during the summertime when the weather's nice, particularly here in the United States. They're projecting revenues between $2 and $2.1 billion. Again, a nice acceleration, again, quarter over quarter, likely year over year as well. Now, the thing with Airbnb is they've got to continue to grow because we talked about a $97 billion valuation. And for the most part, the upcoming quarters are probably priced into the stock a little bit. Expectations for the upcoming quarter was right about $2 billion. We talked about how the company is guiding between 2 and 2.1. Expectations was 1.96. The high end of analyst estimates was right where Airbnb was or is looking to come in on their revenue. Again, that'll be about 50% year over year growth. But notice for the upcoming quarters and really the next year or two, analysts are looking at Airbnb slipping back into kind of high teens, 20% year over year growth rate on that revenue side. Where you should see the acceleration though is on the earnings side. And I'll show you that in a minute, how this company is like right on the edge of making a profit. And it looks like that's what Wall Street is projecting. But we talked about how this company generated $17.2 billion on the platform. That was over 100 million nights in experience booked for the first time over at this company. They surpassed 100 million activities on the site. And that's great from a user's perspective, remarketing those people for another trip later on. That's fantastic. But what I did notice though, is on that revenue side, we still just came in at 1.5 billion. And I say just, yeah, year over year, it looks fantastic. It's that huge growth that you want with this company. But look over the last 3 quarters, we went from 2.2 down to 1.5 and again down again to 1.5, or essentially flat. And so that is just something to kind of keep in mind. Despite our average gross booking increasing in the most recent quarter, company taking on a little bit less revenue, maybe they're doing a little bit aggressive on the promotions, on those types of things to keep people on the platform. Again, there's lots of competition in this space. Airbnb certainly on the podium of like gold and silver medal winners, but you have to keep in mind you're paying a premium valuation for this one because we had $1.5 billion worth of cost to go along with the $1.5 billion worth of revenue we had in the most recent quarter. And then I talked about how quarter over quarter over quarter, we're actually seeing a decline of those revenues. And so that obviously plays into the hands where Wall Street is expecting this company's revenue growth rate to slow. But from a profitability side, that is where they're looking for progress. Because notice last year, we made $886 million over at Airbnb. We had $1.3 billion worth of costs. So we lost over $445 million from that income from operations. Now, this year paints a little bit different story. We're right on the edge of profitability. We had $1.5 billion worth of total costs to go along with our $1.5 billion worth of revenue. So we basically were break even. We lost about $5 million. So this company night and day, year over year from a profitability perspective. And so analysts are kind of projecting the upcoming quarters that these revenues, they're not going to grow as explosively as they have in the past, but that profit is going to start to edge up. And again, at a $97 billion valuation, still pretty rich in my opinion. Now, what's slowed down, or at least we're starting to get a little bit of cap on, this is our stock-based compensation. So off of this $1.3 billion worth of costs, this is last year, $229 million. Yeah, $229 million was attributable to stock-based compensation. In the most recent quarter, about $195 million of the 1.5 is related to stock-based compensation. I'll let you decide if you want to invest in a company with $1.5 billion worth of revenue and they spit out nearly $200 million of that in stock-based compensation. I'll let you decide. We'll see how that reconciles when we get over to the cash flows. Now, from the balance sheet perspective, super clean, super investable. You've got well over, that's almost $9 billion worth of cash. In fact, it's a little bit over than that. Liability side, not a whole lot here. Balance sheet perspective, Airbnb is everything that you'd expect a company like this. Now, here's where it gets exciting with Airbnb. Certainly, if you're looking at somebody that's very bullish, this company, they're not necessarily going to come up here and look at income from operations, certainly earnings per share and net income. They're going to want to pull you all the way down to cash flows, because this is where it actually gets pretty exciting for Airbnb. We see we had this net loss. Again, you pull that up here. We roll through income taxes, some interest as well. In the most recent quarter, we had a net loss of we'll call that about 19 million. Last year, you were at about 1.2 billion. So they've really turned the corner in terms of profitability. On an earnings per share side, you can see it even more. You lost $1.95, and then you barely lose any money in this most recent quarter to 3 cents. Again, analysts are projecting that this goes positive in the upcoming quarters, and Airbnb starts to make some money. Not a ton of money, but they'll make some money. So we pull down those net income numbers. Again, 19 million most recent quarter, $1.1 billion loss in the previous period. You get to add back in things like this crazy stock-based compensation at $230 million. This year, $200 million. And you come all the way down and you see here your net cash provided by operating activities. Look at this. You went from 618 positive cash flows all the way to $1.2 billion. So folks, off of $1.5 billion worth of revenue, $1.5 billion worth of revenue. This is why this company has a big valuation. Okay. Some of you might be wondering, how does this company have such a big valuation? Okay. Here it is. Off of $1.5 billion worth of revenue, they recognize $1.2 billion worth of positive cash flow. This is a company that just absolutely prints money. Once you reach an economy of scale, once you have all the users on your site, it's kind of like an eBay. It's exactly like an eBay. It's exactly like an Etsy, a little bit like Amazon's business, a little bit more complicated than just a straight marketplace these days. But this is why this company has a high multiple. You've got to keep growing these cash flows, though, in order to maintain the multiple that this company has on it. Everything else about what you'd expect with this company, they didn't do a whole lot. Now, from a technical perspective, it's setting up like a couple of stocks that I've seen. What we're doing is we're making a little bit of a convergence, okay? We're making lower highs in kind of the longer term. I mean, this stock has been in a downtrend like most stocks since Q4 of last year. So from November all the way to the present day, we're making lower sets of highs. That is a downtrend. Now, little bit shorter term, I would say really just kind of year to date or just the last couple of months, you made some lows here in January. You took them out in March, but now we're making kind of a high. Some people would argue this is maybe kind of at a bottoming forming here, but in the very shorter term, you're making higher sets of lows, and we're starting to kind of like meet at a point. And this kind of makes sense with where the market, not necessarily the whole bull market, but I would assume a lot of stocks are going to start meeting this kind of fork in the road where you have sellers pushing the highs down and you have buyers pushing the lows up. And at some point, this stock breaks one way or another. And you did not tune into the channel today to have me tell you that Airbnb is either going to go higher or lower, but that will be your trigger on the new trend for Airbnb. If we break below kind of where the lows are back here in March, that would be down here at about $140 per share, about $10 lower than where the shares trade at today. That, to me, you go south of 140 again on Airbnb, that would just confirm to me that this downward trend is intact. And if you want to play by the dip, you have to keep in mind that this is a falling knife if you take out these lows. There is an area of support down here at about $130 per share. That would bring in the multiple a little bit. Certainly when you're looking at kind of price to cash flows over at Airbnb, that valuation is going to make a lot more sense than like a price to earnings, even like a price to sales. Now, on the bull case scenario, you need obviously the stock to continue to move. It's right here at 150. You, though, need to make a new higher set of highs. That means you need to get up here into the 170s, 175s. You get up into there, that would at least have temporarily kind of broken this downtrend you're at least from a technical perspective. Obviously, the stock continues to move higher. Well, all of a sudden, your multiple looks even higher, and this company has even higher expectations that they're going to have to make. I think the number one thing to remember with Airbnb is this company has to print profits in the upcoming quarters while maintaining relatively strong revenue growth. The upside with Airbnb, I don't necessarily think is going to be on this profit side, is if they can keep accelerating these revenues. They're expected to go to like mid-teens to 20% growth in 2023. If they can push it to like mid-20s to even potentially 30% revenue growth, well, all of a sudden this stock's multiple probably makes a lot more sense. And that, in my opinion, is what would send this stock higher. Anything less than that, and probably lower days are ahead for Airbnb. Hopefully, you guys enjoyed today's video. I'll be back again soon with more. Good luck with your investments.